TWT today, and we're going to be uploading another video today. And this is going to be a completely raw, unedited video of just breaking down the charts. So today we're going to be breaking down the gold slash USD. So before we even get into sort of analyzing the chart and sort of showing you some of the step-by-step things that I'm going to show what is on the screen right now, I also wanted to address that I do have a Telegram group, so I want you guys to be joining this Telegram group if you are interested in watching and taking on some of the live trades that I'll be taking day in and day out. I will also be showing market analysis and also showing you guys my thought process so that you can start learning and picking up things that I do when I take my trades. So as we begin, I'm going to show you guys exactly the chart. So this is the chart that we've been given for the gold slash USD, right? And you're probably looking at this like a load of mumbo jumbo. I'm going to show you now, right? In this area, right, we're looking at specifically the last week, so Friday. We're looking at this is literally just before Friday, right? This is what's happening more or less from this week onwards, right? And so this is everything that's happened this week, right? So why am I looking at this region here? It's because it's the last move before this week, right? So I drew out a box to sort of represent that region, right? And so below this level is going to be where people are going to be naturally putting their stop loss when price begins to run higher. Which means, and this is basic mathematical derivation here, where if people are willingly going to put their stop loss in a region such as where I pointed out in this red area, when that stop loss is being taken out, when red boxes or black boxes in this scenario begin to start falling lower and lower, we take out the liquidity that's resting in that lower region. If that occurs, that means that the liquidity within these stop losses that are resting here is going to allow the potential of the money that's being made in this to then begin to start running higher. Because it's clear mathematics, like where can the market begin to derive and run higher if it isn't seeking out potential areas where there is resting sell stops? It uses the money that's resting down here to begin the bigger move, to begin running higher, right? Mondays tend to be the day where it kind of starts to set the scene, kind of show you where the market wants to go. Tuesday to Wednesday tends to show you the opportunities where you can start getting into the trade. So I have not taken a trade on gold yet, and I'm waiting to find an opportunity to take an opportunity on gold. So I've seen that there was a fair value gap resting down here. There was a mitigation block around here with the wick, and there was also a rejection block over here. So now I've named three things that are very important. The difference between this block to this block and being an open gap where it's both green candles on either side of it becomes a imbalance, meaning this is an area where price would want to come in and trying to reflect either inwards or outwards of it, right? In this scenario, it's come in and come out, right? In this region, we have a mitigation area where prices come into this region, rested and began to consolidate, meaning it's moving in a sideways movement. Price then came up into this region where it hit into this wick, and when I mentioned wick, I want you guys to check out my first video I ever uploaded in terms of this trading channel. One of the first videos on the trading course for seeking liquidity, I referenced this area where the wick can represent the story and the direction where the market wants to go. So then what does this mean? What does this region specifically represent? Why do I call this a rejection area? Because prices come into this region and begin to create more wicks. It started to create these lines where it's not running any higher. It's not going beyond this high. It's not going any lower. It's sort of resting in that region, meaning it's rejected that area. It's rejected this region, right? So what am I doing? You've probably listened to this entire analysis where I've sort of broken down the chart, and you probably wouldn't just hear what I'm planning to do so you can copy and paste it onto your own charts, buy loads of gold, and then hope to run to the highs. That's not what I'm doing. I'm not going to tell you exactly what I'm going to do. If you want to check that out, I'm going to be releasing a mentorship scheme where I'm going to be releasing my day in and day out trades, the exact trade that I take. And if you want to copy that, you can check out in the link description down below for the WAP channel where I'm going to direct you to my mentorship scheme. I'm going to be doing a 3-day free trial. So if you guys like the kind of money that you're making from that, then you can then join the full mentorship. I'm not entirely sure how I'm going to do it or how much I want to charge. I want to see how much demand I'm going to be deriving, and then I'm going to do a huge drop probably around next week or the week after, when I start building more traction on the channel. So as you guys may have seen, I started this channel around 2 weeks ago, and I've already gained around 500 subscribers, or near to 500 subscribers, which is absolutely amazing. And I don't think I've really spoken to you guys about that. But I'm really grateful for the fact that I've reached 500 subscribers, and I'm aiming for around 2,000 to 5,000 subscribers by the end of this year, hoping that I maintain the same sort of momentum and trajectory. I know that it's a very saturated market, and that it's not easy to naturally just become inclined to watch someone on YouTube who's teaching you how to make money, because it doesn't naturally sound like it's correct. But I'm going to be uploading on my Telegram, where I'm going to be regularly uploading information and things that I'm reading and touching up on. As of today, I'm currently reading upon one book specifically called The Stock Market Psychology. This is written by Carl Eric, and I don't want to butcher the last name, but I'm gonna take a picture of it and upload it onto my Telegram and show you some of the information that I'm picking up from this book. This book has definitely taught me a lot of information about psychologically being able to learn a lot from the charts, as well as my background, where I've studied a lot in corporate finance. I've also studied a lot of mathematical derivations, where it's taught me the psychology, the mathematical ways that the market can move. But then also, I've also learned a lot in terms of like on hand, on deck, learning how to trade through Bloomberg Terminal, which is like what traders use in the big banks like JP Morgan, Citibank, etc., etc. And I've also worked at a bank where they were doing these kind of trades. So I've got a lot of knowledge behind this. So when you do plan to watch these videos, and I'm hoping these are one of the first videos you guys kind of pick up on, because I'm literally telling you and showing you that what I say works. I literally called out on the very, very, very first video I ever uploaded on my YouTube channel, me telling you guys that Ethereum was going to drop from 3,100, I think. It was going to go below 3,000, which means if anyone was able to take that trade when I called it out, you were going to make approximately around £1,000, if not more, because it dropped down to 2,100 if you held into that trade. But I didn't call that entire trade out because I haven't created a platform where I had people on there watching and taking into consideration what I'm teaching you guys. So until then, I'm going to show you guys the trades in and out on that platform. But for now, I'm showing you the analysis so that you guys can take this consideration of where and what I'm going to plan to do. So going back into this, right, we can see that price is respecting the two boxes or the two regions that I marked out. We're going to call this box 1 and box 2. Box 1 is where price is rejected and begin to run lower, and box 2 is the region where price is beginning to sort of stabilize and reach those specific tops and bottoms of that box. Tops and bottoms just being this bit and this bit, right? So what does that mean? That means that basically if the market is beginning to stabilize in this region, I'm hoping, and this is what I'm going to be looking for, is for price to make a significant low where it begins to run a little bit lower, maybe tap into this region, potentially even run lower and tap into this region. I've got something to call out, so I get an alert on my phone or my laptop to tell me if price has reached this region. And this is where I would plan to start taking a lot of longs onto gold. And when I mean a lot of longs, I mean 2 to 5 lots of gold, which means if this play was to play out, we're looking at around 5,000 to nearly 10,000 pounds, like that. Okay, this is a massive trade. So I'm not telling you guys to follow everything I'm saying. This is not financial advice, but I want to make clear that this is my ideology. This is what I plan to do, have this happen, right? And this is also to kind of prove to you guys what I'm telling you now is to set you up for my mentorship scheme, where you'll get the calls where I'm going to literally show you how and what I'm going to do, when it happens, when I enter, when I close. So you can literally copy and paste these exact trades and start printing for yourself. Okay, this isn't gambling. Okay, this is systematic trading, where I'm literally showing you my analysis, why it should happen and why it shouldn't happen. And also, guys, if you are enjoying these kind of videos and you kind of want to see my analysis as to why I'm doing these certain things, please comment in the section down below if you are liking this kind of content, where you found my content as well. I kind of want to direct specific people to the specific area that I'm marketing towards. And yeah, I'm going to wrap up this video today. It's going to be, again, another little short one, but it's just to show you market analysis on gold. And yeah, this is where I'm going to end the video. I hope you like and subscribe, guys, and peace.